Hello traders, Gary Wagner here. Just about 1:30 in Honolulu, 7:30 in New York. It is Thursday, 8th day of April 2021, and this is the daily report for gold and silver. Respectable moves in gold, silver, and the ETFs, GLD and SLV today took all of our positions into profits. On today's show, as I promised yesterday, I want to focus on our exit strategy as well as current support levels. To that end, let's begin the show. Traders, extremely nice, respectable gains in both gold and silver today, as well as the ETFs, SLV and GLD. We did send out a trade alert this morning with stop recommendations you initiated on the open of yesterday's trading activity. Gold currently up $14.90. That is a rise of almost 0.9% and currently stands at $17.5650. Of course, we are long at $17.44. In terms of GLD, we'll cover that in detail, but we did buy the open yesterday. That gained a full percentage, or $1.75 per share. 164.51 is where that market closed. Traders, an extremely solid move in gold today. As I said, gaining almost $15 in trading in New York, currently fixed at $17.5560. We talked about the fact that we absolutely have this double bottom that occurred back in the beginning of April as well as in March. It also matches up quite eloquently to price lows that came in between May, June of 2020. But what is most impressive to me currently is the fact that when we look at our moving averages, what is most interesting is for the last, call it 3 trading days, we have absolutely traded above that particular price point, even with yesterday's fractional decline. But what I'm more excited about is the fact that we are finally approaching the 50-day moving average, and the 50-day moving average, a move above that, would signal that at least for now, we have moved into bullish territory on a short-term basis. We can see that the open is just above where they're fixing the close in New York. So the next question must be, where will we find resistance should the market continue to move up? And traders, just as we did in silver, over the last couple of days, we have adjusted our Fibonacci retracements to a much more short-term level, and in that way, get a better sense for current resistance and support levels. First of all, we have passed the 23% retracement. That was at 1742, and that was a key reason that I really wanted to wait for a break to or above that price point before entering and saying that this is actually a real breakout and not just a short-term bounce. Obviously, 1680 is the next level we want to look at, and that is simply the 50-day moving average, but we're very close to that, and I do not see any issues. I look at that as minor resistance, with the first real level of potential resistance coming in at approximately 1785. Next, extremely major resistance area occurring at the 50% retracement, and that particular number comes in at around $1,820. Therefore, traders, our exit strategy on this particular trade is to get out somewhere above 1,800 and 1,820. Traders, maintain your long positions in futures and Forex gold. Lastly, in gold, we did make a recommendation when we sent out our trade alert on April the 6th to buy the open of GLD on Wednesday morning the 7th. Traders taking that call got in at 162.82. Currently, we are at 164.51. We put our stop really at 162 even, and that was based upon the 21-day moving average here, as well as below the lowest low over the last 3 trading days. Like gold futures, we are quickly approaching that 50-day moving average, and that to me is significant. Maintain your long GLD, maintain your stop at 162. In terms of percentage gains, silver once again led the way when compared to gold, gaining 1.1%, a total of about 28 cents, and is currently fixed at 25.52 cents. That is basis the most active May contract. We entered positions in SLV on the open yesterday. That gained 1.24% or 29 cents per share and is currently fixed at 23.62. We'll cover the ETFs in detail as to where we got in, as well as the rationale behind where we put our stop, which we sent out today on both SLV and GLD. Silver also had an extremely nice day today as it gained well over a full percent. It is currently trading in Australia at $25.50. What is most interesting to me is the technical indicators, and we talked about this a little bit yesterday, and that is we have adjusted both the data set used for the Fibonacci retracement as well as added a very short-term 21-day moving average to greater reflect the short-term move, specifically this most recent dip and then the subsequent rally that came in, what I'm circling right here. What we can see is that we closed well over the 21-day average today, although we are trading a couple of ticks below the close in New York. We are still above that particular price point. That is the first area in terms of support, and I still believe that we have major support at about $25.13, between $25 and $25.13, and that, of course, is based upon a Fibonacci retracement. In terms of resistance levels, I think that the next major resistance level that silver could encounter, should it continue to rise, which I believe that it will, does not come in till just above $26 at $26.12. Above that is $27.12. And so in terms of our exit strategy, the first thing that we want to be able to do is, if the market continues to track higher, is to go ahead and raise stops, trail our stops behind the upward move, and we'll base that on the lowest low over the last 3 days. Maintain your current long silver positions in futures as well as Forex. I also want to talk about SLV. If you recall, when we sent out our trade alert on Tuesday, we did go ahead and went long in futures and Forex, but our recommendation was to purchase both of those ETFs on Wednesday's open, which was yesterday. Silver yesterday opened at 23.25. It is currently at 23.62 after gaining 1.24%. And in terms of the stop, I sent out a trade alert this morning recommending that we place our stop at 22.85. I have just added where that stop occurs in terms of current pricing, and the rationale behind it was that typically we will move to have our stop at least at the low that occurred over the last 3 days. I thought that was a little tight, so I went back to the fourth day, which is right here. And as you can see, the low comes in just above 22.85. Maintain your long SLV position as well as your current stop at 22.85. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.